Let's bring on board our technical expert for today. Joining me is Sacchitanand Uttekar, who's the VP Research, Derivatives and Technicals at Tradebulls Securities, joining in. Great to have you on the show, Sacchitanand. As always, well, over the last two sessions, we've seen a very smart comeback, by the markets. In fact, the Nifty now hovering around that 19,150 mark. What are the resistance levels that one should be watching out for on the Nifty on the higher side? Sacchitanand, I think you're
Good
on
morning.
mute. Hi, good morning.
Good morning, Nalita. I'm really sorry for that. Uh, as you've seen yesterday, the recovery has been very strong. In fact, it has been a very good start for the week. Nifty did make an attempt towards its 5-day exponential moving average, which is placed at around 19,150. It has still not managed to close above it, but probably looking at the cues today morning, the way we have seen a breakdown in crude oil prices, probably that could help the Nifty scale higher towards 19,300, 340 kind of a zone. I think for this particular week, the main resistance is placed near to that particular cluster. So going forward, we are of the opinion that the Nifty could remain on the positive side, keeping a very brief support zone somewhere close to around 19,000 for this particular week. So we are not expecting any major slippages below the same. But if you look at the overall broader structure, we have already seen a very strong low top, low bottom sequence here. And on the daily scale, Nifty is still not exhibited a very strong reversal formation. So I think even for today, one can trade with a positive bias, but the range which has been evident on the higher side as a resistance is somewhere close to around 19,280, 340. And on the lower side, we are, of the opinion that the floor is well set around 19,060. So probably we may see Nifty oscillating within this particular range itself.
All right. What about the bank Nifty? Given the fact that yesterday we saw, I think, an over 500-point recovery from the day's low. What are the levels you'll be watching out for there?
For Bank Nifty, it is still, struggling below its 200-day exponential moving average, which is placed somewhere close to around 43,260, 300 kind of a zone. So until unless we don't see a confident closing above it, we may not see a very strong rally getting built in when it comes to Nifty Bank. On the lower side, though the support is placed somewhere close to around 42,700, 42,680. So even here, we may see the Nifty Bank also oscillating within this particular band. But if you look at or compare both the indices, then clearly, Nifty is still standing out. And, we may see that leadership getting continued by Nifty itself.
All right, Sacchitanand, what are you flagging off for viewers this morning?
Now, the three stock recommendations. A couple of them we have already recommended to our clients. So this will be my disclosure. Indigo is first counter, which has displayed a very strong bullish rally on a weekly scale. Yesterday we saw a good follow through action there. The 2,500 mark, which was acting as a call writer, zone, has been clearly getting valid on the higher side. So we may see a good short covering move here. We're expecting that eventually the stock could rise towards 2630. From a immediate perspective, one can keep a target at around 2550. Long positions are recommended here, keeping a stop loss at 2485. The second stock that we are liking, wherein there is a good sign of a reversal here, is Kotak Mahindra Bank. It has formed a very good base at around 1700. There's a very rare candlestick formation called as bullish homing pigeon. We are expecting that this particular move can unfold towards 1750. And that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 1710. The other stock, the last final stock is GNFC. Even yesterday, we saw a very strong move in this particular counter. If you look at the weekly structure or the daily structure, there's a clear-cut breakout from a flag formation, which is again a continuation pattern. The pattern is indicating a price target somewhere close to around 745 on a positional basis. And that's why we continue recommending long positions here, keeping a stop loss somewhere close to around 664.
All right, those are the recommendations coming in from Sacchitanand this morning. With that, Sacchitanand, thanks a lot for taking out time and joining in. and sharing your thoughts on so many stocks with us, and of course also answering all of your queries.